This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. And as we always begin Fridays by saying, and I think it's true, especially this week after all that the market has seen, thank God it's a Friday.
We really say that.
We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Survi and Nigel. Guys, good morning.
Morning. Good morning, Prashant. Good morning, Nigel. You know what the most important cue, Prashant, today is? The checks that we were speaking of in closing bell. The blue on blue, Mayuresh and Nigel. I don't know, maybe that's got something to do with, maybe we get a turn today, purely the checks.
I mean, I could find a lot of reasons. Maybe we're getting into that oversold zone, but will he bounce today or do we have a couple of more sessions? Well, time will tell. But since it's a Friday, maybe if we dip into the red, maybe I got a bit of a good feeling, start of a new series.
Yeah, no, I mean, I think...
Actually, that means the two of us, yeah.
But that check thing was quite something yesterday. And by the way, when I think you mentioned it, I immediately reckoned, well, this has happened before.
Yeah.
And I think Mayuresh came back and said, well, the last time it happened, the markets
bounced back.
So, well, let's hope for the best, right? But let's just begin with what you need to know in terms of today's trading setup. So the selling continued yesterday as well. Yesterday was the sixth session of the market actually falling. But I want to start by saying that the Nifty and the Bank Nifty are very, very oversold in the near term. I said this yesterday that in a bullish phase, when there are corrections, oversold conditions means that there is a bounce. In bearish phases, and I don't think anyone has really changed their view completely, saying that, well, this is it, and the market's now selling off in a big way. But in a bearish phase, oversold can remain oversold for a long time, and markets can sell off even from extremely oversold levels. So, that's the setup we begin with. Global markets, nevertheless, are the pain point. I think that's been true for some time. So the Nasdaq ended about 1.7% lower. The S&P was down about 1% as well. The S&P, by the way, is now below the psychological support level, which is at about 4,200. We were at 200-day moving average on the S&P just 2 days back, and now that's gone. Of course, 4,200 is also gone. I thought U.S. data last night was strong. You had but maybe for the markets it was not strong enough. I'm just sort of leaving it as a question mark. But I think, and I'm sort of leaving this as a question mark only because the market reaction, especially on the bond market side. So third quarter GDP grew gangbusters, right? 4.9% growth. Some were penciling in 5%, but the consensus was 4.5%. So 4.9 is a significant beat. Initial jobless claims number was also low. So there was not very much to fault as far as the numbers are concerned. But to boot, you also had the Treasury Secretary Yellen, who came out and said that, and this is, by the way, after the GDP numbers, that rates perhaps, and I'm paraphrasing her here, that rates are going to be higher for longer. But look at the reaction. The 10-year lost 11 basis points to 4.84%, right? Monday we got to 5%. Wednesday when we came back, we were at about 4.82. Yesterday we, at one point, were about 4.95 when we started, and we are back at about 4.84. So maybe closer to 5%, people are covering shorts, and actually that's playing out. I mean, some of this is technical in nature, but there seems to be resistance around that 5% odd level. The dollar index, though, climbed up a little bit, not too much. We're above the 106.5 levels. Just one thing. And this is interesting because the market and on the equity side sold off, but the CBOE Wix, which is basically the volatility gauge, the fear gauge, that did not rise above Monday's high, which was 23.08. Markets are significantly lower as compared to Monday on the US side, but the CBOE Wix did not, jump beyond the high for this week so far. Oil, it's worked in a positive way. So oil prices are now at 2%, 88.37. Again, here, we've been between 88 and about 93, 94 or so. Before this Israel-Gaza conflict started, we were at about 88, 87. It looked like we were nicely falling. And then prices spiked up to a recent high of about 93 or so. And we are back at about 88 now. Now, as I said, just to circle back to the levels here, the market here is very oversold. The Nifty daily relative strength index is at about 27. If you look at the hourly RSI, it's now tracking 14.15. Now, this is extremely oversold levels, and hopefully we perhaps get a bounce. I mean, usually we do. 18,700 remains the support level for the market. That's about 1.5% away from where we left off yesterday. Not even that, right? So we'll see. But that's right where we are. And hopefully around here. This is the congestion level, by the way, 18,700 in the June to July period for the Nifty. And we don't go very much below these levels. The Bank Nifty RSI is also quite oversold at 26 odd levels. So again, a bounce expected. Support only though here at 41,570. What is this? This is the 61.8% retracement of the rally from the March bottom, right? 31st of March is when the rally started, all the way to the October high, which is a few days ago. So that is at about 41,570. So Bank Nifty has been much weaker as compared to the Nifty. It's broken through, lots of levels. A confirmation of a reversal or a sustained bounce will only come if we get a first positive daily close. So I think that is what I would watch out for. And I think the importance, I would sort of place more importance on this, since this is also the weekly close. So hopefully today is going to be different as compared to the last many trading sessions or so. But be in no hurry. Let the market tell you that it wants to bounce and it wants to sustain. Because it's going to be choppy. You will get bounces which will get sold into. The market will find a bit of a base and it will take a few sessions and then the reversal will start. One thing is clear, that, the go up and up market that we've had, that, you get a bounce and the market starts to move up, rally up like this row tomorrow once again. I think that phase for now is behind us. So it's going to be more measured, more choppy. And that's why I'm saying don't be in a hurry to get in at the first sign that the market is starting to move up a little bit. The Gift Nifty will come up on your screen. And I think that is indicating an absolutely flattish kind of start, about 17, 18 odd points higher. Surabhi.
Prashant, completely take everything you're saying on board. In fact, I was also going to say that we're starting with what looks like a more benign environment with respect to yields, with respect to, of course, the market being sanguine about the GDP print. But one thing has changed in the last, I think, just couple of minutes or maybe the last half hour. US has struck Syria. So let's not get alarmist here. But these are fresh moving developments on the ground. And we have a statement from the US Defense Secretary. The gist of it seems to be that these are targeted strikes at sort of hostile facilities in Syria. That's what the statement also says. And it goes on to add that the United States does not seek conflict and has no intention nor desire to engage in further hostilities. But these Iranian-backed attacks against U.S. forces are unacceptable and must stop. These narrowly tailored strikes in self-defense were intended solely to protect and defend U.S. personnel in Iraq and Syria. They are separate and distinct from the ongoing conflict between Israel and Hamas and do not constitute a shift in our approach to the Israel-Hamas conflict. So very, very clear statement coming in from the U.S. Secretary of Defense. But markets will, of course, have to go through this and realize that we can't ignore geopolitics, not even for a second. Just when you thought that this seems to be contained until there's some fresh ground offensive, markets can forget about what's happening in the Middle East. Well, I guess that's not the kind of morning that we have today. There's been a slight shift. I mean, yields have cooled off a little bit. So the U.S. 10-year was about 4.87. It's fallen. Natural reaction to any element of uncertainty. There is a rush to U.S. treasuries, and some of that has happened. Interesting moves in the currency market as well. The dollar has actually been a little wobbly. The euro has spiked up in the last hour and a half or so on the back of this. So let's see how the geopolitics plays along. But otherwise, we had a pretty good setup going into trade this morning. As Prashant mentioned, we're talking about oversold markets. So the next level to watch, of course, is the 200 DMA on the Nifty. But that's still a distance from where we are. We're talking about 18,607. That's what we have to look at in terms of the next technical level to watch out for. Volumes were high in the cash market, and there was plenty of selling from foreign institutions once again. Domestic institutions are trying to buy most of it, but not all. 7,700 crores of net sell, about 6,500 crores of net buy. Just a pointer here, the FPI selling has been pretty incessant in the last several months. Last 2 months. That negative sell figure continues for October. And we are down about 14,000 crores again, and we still have a couple of trading sessions left. So there's no denying the outflow of foreign money that we've seen in the last 2 months. This week, however, we keep talking about this, these oversold levels. Nifty is down 3.5%. The mid-cap index is down 4.5%. The small-cap index is down 4%, and that was already showing signs of some sort of a bounce. There was intense small-cap buying going on in the market yesterday. So let's see if we get any more of that. Also, lots of results. So beyond all these global headlines, I think there'll be some focus on what's happening here at home as well. There's Reliance after the bell. We'll hear from Maruti, Dr. Reddy's, Cipla, and a couple of very interesting mid-caps as well, large mid-caps. SRF, I could count it in that list, Indian Hotels, Mahindra and Mahindra Financial Services. So lots to keep us busy. But Nigel, one would just hope that we don't need more negative geopolitical headlines so that we can get that bounce. Dead cat or not, but hopefully a bounce.
Well, in terms of the big FII sell number, kudos to all the investors and all the domestic funds as well. Because if you told me that, there's going to be an FII net sell of $1 billion and the markets are going to be down, 100, 200 points, or you'll take it with both hands, 1.5%. In the past, if you saw $1 billion of selling, well, the markets could have been down much more. So keep those SIPs going, keep the faith, because in the longer term, that's what's going to make you money. So stay invested is all I'll say, and gradually you could start allocating as well. Now, yesterday, if you look at it on the Nifty, there was expiry that played out. So you pull up the intraday chart, you'll see that the Nifty, any kind of bounce was getting sold into. So that was a pressure pocket. But just take a look at the advance decline ratio. At one point of time, there were only 200 stocks that were advancing. By the end of the trading session, they almost wanted to get closer to each other. So the number of stocks advancing, I'll read that positively. How are the FIIs positioned at the start of a new series? Well, they have close to around 89% of their positions on the short side. That's a big net short number that we're talking about. And on the option side, well, they've written calls very, very aggressively. They've written close to around 7 lakh calls odd. Last 6 sessions, we have lost 950 points approximately. So there's good enough reason to see a bit of a bounce, whether it's a dead cat bounce, whether it gets sold into. The trajectory is down, but at least it's possible that we see a couple of 100 points bounce from these levels. And you'll be worried, the FIs are net short. That's a big worry, right? The last time they were this net short was at the start of the April series. And take a look at what happened. You had an 800-point rally out there. So this time around as well, they're similar in terms of the net short positions. You'll be hoping that maybe we could pull back, and the FIs will be clutching on to this data point. The other factor is the FI absolute net short position has crossed 1.5 lakh. The last time we saw it was on March 28th. And at that point of time, the markets made the low, and from there we did bounce up. Just pull up the March 28th close. That was at around 16,950. That was the lowest that we saw in that phase. From that time, we haven't seen that number yet again. And the next few sessions, we had a bit of a bounce. So short point is the bulls will want to count on these FI net short positions, and not such a bad thing, and refer to the historical data that I put up for you on the screen. Pulling up the levels then, well, the Nifty on the upside, on the downside, in fact, let's look at that number first. The 200 DMA, that's very, very, very important. That's 250 points away from current levels, while resistance comes in at around 19,200 to 19,350. Why is that mark important? That's 19,350 because it's the neckline of the head and shoulder breakdown. So that's the important technical mark that we're looking at. After that, you look at the 100 DMA. So in the near term, we're bracing for a bit of a bounce. We have a 20-point downtick, I think, is what the GIFT Nifty is suggesting. Maybe you get a bit of a deeper downtick, and then you look to buy into. For the starters, it's going to be flattish. You'll want to buy the dip today, trail your stop loss, and hope that you get a couple of 100 points bounce.
Okay, let's see if that bounce indeed comes along. Let's get moving then with the equity call of the morning. This is coming in from Chris Wood of Jefferies, who says, from a market standpoint, greed and fear sense is that markets will continue to try to ignore events in West Asia so long as no invasion is launched. He says, indeed, this can even trigger something of a relief trade, allowing the stock market to ignore for a while longer the native implications of uncomfortably high bond yields. He adds, meanwhile, if greed and fear is wrong and the invasion is launched, there will be an immediate negative impact in terms of a spike in the oil prices and renewed concerns of a broader regional conflict, concerns which, unfortunately, will be quite legitimate.
Okay, well, let's get you some money market views as well. We have Lakshman V of Federal Bank, who says that on the back of strong consumer and government spending, the US GDP expanded at its fastest quarterly pace in nearly 2 years. Supporting the US Federal Reserve's narrative of higher for longer, he says the rupee is consistently under pressure due to persistent outflows in equities coupled with elevated US Treasury yields. He expects the rupee to trade between 83.05 to 83.48 for the next few trading sessions.
On bonds, Lakshmanan says bond yields remain in a narrow range in recent sessions, broadly following US Treasuries. He says RBI MPC minutes were as expected, with members cautious on the inflation front. He expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.45% in the coming sessions.
Well, we've got a lot of stock-specific action track for you. We'll get to that in just a bit in our special Top 10 segment. We're looking at Sun Pharma, Dixon Tech, Vodafone Idea, RailTel, Avas Finances, Home First Finance, Karnataka Bank, and AGI Green Tech. All of them on the back of positive news flow, while on the flip side, you have Colgate and NLC India.
All right, well, Matt Orton is with us, Chief Market Strategist at Raymond James Investment. Matt, good to have you with us here as always on CNBC TV18. Good morning. I thought the data last night from the US was pretty strong, but was it not strong enough for markets? Because yields came off sharply, or is it something else which was, the driver there?
Yeah, good morning, Prashant. Always good to see you. And I would almost flip that. The data was too strong, I think, for the market because it seems like the U.S. market and global markets in general are trading on this theme of good news is bad news. The stronger the data seems to come in, the more the market realizes that higher for longer really means higher for longer. We've talked about that really throughout this entire year, that the Fed is very serious. They're dogmatic about reaching their 2% inflation target. So when you get good news, that's great from an economic perspective, but it means that there's going to continue to be pressure that rates are going to continue to move higher, especially at the back end of the curve as the market normalizes. And so I've been meeting with clients over the past 2 weeks, and I can just sense the frustration and uncertainty that's out there. But what I remind them is the playbook that we've been recommending, the playbook that we've been talking about, Prashant, on the show, is leaning into quality. So owning companies that not only have stronger balance sheets that can weather a higher rate environment, but that are generating good free cash flow. They have a good free cash flow yield. They don't just have earnings and profitability, but they have earnings growth. And those are the companies that have outperformed. Quality has meaningfully outperformed the broader market over the past couple of months. And I think that's going to continue to matter going forward, no matter what region of the world you're in. So I would lean into quality and lean into micro drivers to help offset some of that macro uncertainty.
Matt, hi, good morning. We have seen quite a sell-off here in India as well. It started with mid-caps and small caps and spread to large caps. How would you approach this market? Would you buy? Would you wait for things to settle globally? What's the sense?
Good morning, Surabhi. And, I'm optimistic on India. India is my preferred region within the emerging markets. And the sell-off has been extremely swift. It's been a little bit surprising just given where the fundamentals are relative to the rest of the world. And I always say I'd rather be a little bit late and right rather than early and wrong. And so I do agree that we're likely, hopefully going to see some sort of bounce in the near term, but I want to see confirmation. I would like to see follow through that the bounce is going to be sustainable. And then I think the downdraft that we've had has created good opportunities because earnings, especially in some higher quality parts of the market, are still doing well. So I still think it makes sense to lean into some of the auto companies because you've seen some strength and relative outperformance in that part of the market. Similarly, I think within banks, bank earnings have actually been pretty good, but that's an area that's a little bit more questionable. I'd wait longer before going into. But you can also play defense in the food products part of the market too. There's some really high quality companies there, like Tata Food Products, consumer products. That's a company that continues to see good free cash flow generation. So that leans into that quality element, and you're able to play defensive growth. So I'd be looking to use that downside opportunistically. So get your shopping list ready and wait to get a little bit of confirmation from the market first.
Hi, Matt. Good morning. For us, the problem is the two pillars of the markets, that's tech and banks. Well, they have not really performed. Tech, maybe rightly so after the kind of run-up that we had, results didn't really match. But for us, the banking names, so they're important because they have a large weightage in the index itself. From the banking names, anything you liked, in terms of that shopping list, what's on your radar?
Yeah, Nigel, I think within the banks, it has been tough lately, but I think a bank like ECC, it makes a ton of sense. I mean, that's an area where you're able to get mid-double-digit ROE growth. You're able to get benefits from net interest margin expansion and a really, really solid balance sheet. So I think that's an area of strength. It's also a larger weight within the overall index. So if we can get the legs there, I think that's a bank that I would want to lean into and leverage some of this uncertainty to maybe build more of a position in.
All right. Matt, one would have thought, just sort of going back to the U.S. market, one would have thought that, the wicks, right, would jump substantially with these declines that we've seen. But I noticed earlier that it's not. I mean, it's still under the highs that we made earlier, which was about 23 or so. Would you read anything into it? Would you, is it a non-confirmation data point, or you'd ignore it?
I never ignore it. I think the market, and this goes all the way back to October of last year, the market kept expecting some sort of capitulatory level of the VIX. The VIX has to reach 30. The VIX has to reach 40 in order for the market to turn. And it didn't happen then. And I don't think it needs to happen now for the market to move. I actually take solace in the fact that the VIX is still at the same level as it was earlier in the week, towards the end of last week, because what that says to me is there isn't as much of a demand for downside protection in the market, because the VIX at the end of the day is looking at the price of optionality. So if real money, if a lot of the hedgers in the market are already hedged, that to me is encouraging, and that means that when we do see some stability, you're going to see more buying.
Or maybe they're not adequately hedged, which you could read it both ways in case. And in that case, the outcome was different. But always good speaking with you, Matt. It's a pleasure having you with us here, and hope to speak with you soon again. Thanks indeed for joining us here on CNBC TV18. Well, we'll take a very quick commercial break here. Our list of top stocks to watch lined up next with our research team. Stay with us.
Welcome back. It's a nice pullback across Asia, you'd have to say. Many of these markets, Japan's up 1.5%, ditto for Hong Kong. So let's see. We should at least start on the positive side. That's what the GIFT Nifty has also been indicating. Let's break this down to stocks now. Our team is standing by with the CNBC-TV18 list of top stocks to watch and lots of earnings on that list today. Let's kick it off, guys. Morning. Manglam, how was Colgate?
Well, Colgate was no different from all the other FMCG companies this time around. What has been the template so far? Revenue is a mild miss by about 1 to 2 odd %. The gross margins have expanded. The company's plowed back that into ad spends, and despite a sharp spike in ad spends, the EBITDA and the net profit have beat estimates, and that's where Colgate was no different as well. The top line was actually a miss by about 30 odd crores, but the EBITDA and net profit were slightly better than expectations. The gross margins improved by over 340 basis points. The company increased their ad spends by about 30% as well. They said that the Colgate toothpaste volume growth was flat, but at the same time revenue growth was higher. The street might see this as a wee bit of a miss on the top line, but generally brokerages are bullish on the long-term strategy of the Colgate management, so it'll be interesting to see where the stock goes from here.
Okay, Manglam, thanks a lot for that. Well, let's hop across to Ekta. She's here to tell us about Sun Pharma owing to Taro's numbers. Ekta?
Yes, thanks for that. Well, Taro reported its numbers. Remember that Sun owns 78% in Taro. It is listed on the US market. So net sales came in at $148.2 million, which was higher on a year-on-year basis. Sales were aided by a one-time gross-to-net adjustment, but even adjusted for that, sales were higher by mid-single digits, which was largely in line with estimates. Operating income was the positive, so $4.77 million versus an operating loss of $6.8 million year-on-year, and that resulted in a margin of 3.2%. Adjusted operating income came in at $10.9 million, which equals to a margin of around 7%. The net income came in at $8.5 million versus a loss of around $2.8 million on a year-on-year basis, and hence I expect the stock, based on the operating performance this time, to probably be in the green, or rather Sun to probably be in the green on account of Taro's numbers.
All right. Thanks very much, Ekta, for that. We'll come back to you for more. But the poster boy of electronic manufacturing, right, EMS as a space, Dixon reported numbers as well. Surabhi is here with details. Surabhi, hi, morning.
Good morning. So Dixon reported a really strong set of numbers. The revenue was largely driven by the mobile segment and the EMS segment, and also by the home appliance segment. There was some weakness in the lighting segment due to the drop in realizations and also the increased competition in that space. Overall, good set of numbers. The revenues were up 28%. They saw gross profit margin expansion of 100 basis points. EBITDA was up 37%. Margins expanded by 20 basis points, and PAT was up 47%. Now, in their mobile and the EMS segment, which is 60% of the revenues, there they saw revenue grew by 77% on a year-on-year basis and 57% sequentially, and margins also expanded 60 basis points on a year-on-year basis. Now, what could work, going forward for Dixon is that they are in final stages of discussion for newer orders with some large mobile and laptop brands, so that revenue could start coming in FY24. And also Xiaomi and itel, the two mobile brands, they will start contributing to revenues from Q4 FY24, so that could work in Dixon's favor going ahead.
Okay, got that. Surabhi, thank you very much. So good numbers from Dixon. In fact, we'll be chatting with Mr. Lal of Dixon Technologies at 9:40 a.m. So make sure you are with us when we have that conversation, talk about the business prospects going forward. Okay, back to more numbers. Vodafone Idea and Railtel. Manglam, this huge loss that Voda Idea has posted. Tell us a little more about it.
Well, the huge loss is on account of a tax provision that the company has made on account of the recent judgment that came in from the Supreme Court. But the revenues for Vodafone just about 0.6% higher quarter on quarter. The good thing was the EBITDA margins. They came in at 40% versus 39%, and that was a bit of a beat. And the loss is higher largely because of the tax provision that the company has created. Importantly, the ARPU, or average revenues per user, has increased by about 2% quarter on quarter, and that was mainly because of one extra day in the second quarter. The 4G subscription is higher as well. Vodafone as a stock has been doing well over the last few trading sessions, so expect it to see a wee bit of green, largely because of a margin beat that the company has reported. The street may discount the tax provision that they've made. For Railtel, however, there's been a margin compression. It's come in at 19% versus 23%, but the street will like the revenue growth of 40% that the company has reported, and the net profit has come in at 68 crores versus 55 crores. See some green on Railtel as well.
Okay, Mangalam, thanks for that. Well, let's wind this down with Abhishek, who's joining us to tell us about some more stocks in news. Abhishek?
Well, to begin with, Aavas Finance, they have gotten a strong quarter this time around. Asset quality largely stable in terms of gross NPA ratio. Disbursals are up almost 18% quarter on quarter, which has meant that the AUM growth is strong, more than 22% YOY and about 4.6% sequentially. They have been able to hold on to the net interest margin at 8% level, which they reported for H1 versus 8% in the previous quarter. And return ratios also remain strong. For Home First Finance, the strong quarter continues for them like they did in previous quarter. Asset quality largely stable, 1.7% versus 1.6%. Disbursals are up 36.6% YOY and about 7% sequentially. AUM growth is strong at 33.3% YOY and 7.5% sequentially. Net interest margin has dipped a bit by 10 basis point quarter on quarter. However, return ratios continue to remain strong. Karnataka Bank, there is a fundraise over there, pref issue of about 800 crores. So they have participants like SDFC Life, Quant Mutual Fund, Bajaj Group, as well as Bharti AXA. Now, calculation shows that this fundraise would mean, Tier 1 increase by 146 basis point, net worth increase by almost 10%. Equity dilution is about 10.7%, so book value can see a decline of 0.7%. However, this fundraise augurs well in terms of, capitalization of the bank. Back to you.
All right, Abhishek, thanks very much for that. Actually, you'll hear from the management of Home First as well in about half an hour from now. Less than that, actually. And that'll be an interesting chat as well coming up a little later here on the show. Well, let's go back to Surabhi. Navily linked NLC India and AGI Greenpack also reported numbers. Surabhi's got numbers. Surabhi.
NLC India, it was a weak set. Coal and lignite production was weak, and that impacted the plant availability factor. The revenue was down nearly 15%. EBITDA was down 29%. Margins came in at 28% versus 34% same time last year. The net profit was higher, but that was aided by a one-time reversal. AGI Greenpack, it was a strong set of numbers. Volumes was driven by increased demand from beer, liquor, and other non-alcoholic segment. The glass container capacity utilization has exceeded to over 95%. Revenues were up 20%. They saw gross profit margin expansion of nearly 500 basis points. EBITDA was up 58%. Margins came in at 22% versus 17% same time last year, and PAT was up 65%.
Okay, got that. We'll put that on our list to watch as well, Surabhi. Thank you very much. We will be speaking to the management at around 9:50 a.m. That's NLC India, so stay tuned for that as well. Quick recap of the stocks to watch today. The ones that have positive news around them are Sun Pharma, Dixon Tech, Vodafone Idea, Railtel, Aavas Finances, Home First Finance, Karnataka Bank, and AGI Greenpack. The ones that have negative news around them are Colgate and NLC India. Okay, so we've discussed stocks, we've discussed the equity market setup. Let's find out what's happening with commodities. Manisha is joining in. Manisha, the Middle East is still where all the headlines are. Good morning.
Oh, yes, absolutely. And, with the latest one coming in with the U.S. conducting military strikes in Syria clearly has led to markets coming in into the positive in sense of safe haven buying. So while we did see a decline of 2% overnight, but we are more than 1% on the higher side for the crude oil prices here. But even with this, we are headed for a weekly decline of around 3.5%. The crude prices did gain 10% in the previous 2 weeks here. As of now, there is no crude oil supply disrupted from Israel-Hamas war, and that is what is keeping the markets quite choppy here. But it is going to be all about the U.S. Fed meeting next week. That is where the next cues would come in from. A quick word on metals, and we have seen strength come back here too. Gold is headed for a weekly gain. Prices are trading at a 5-month highs. Gold clearly has been the safe haven buying this time around. The base metal prices in the meanwhile also have seen some strength. So all tangible commodities trading in the positive right now.
Okay, well, Manisha, thanks very much for that. So commodities, again, very important to track as we go along. We'll come back with Ajay Bodke for a quick fundamental stock check. Lots to sort of throw his way in terms of views on result reactions, etc. So that's coming up in just a bit from now.
Welcome back. Well, we're bracing for a flattish start, but the hope is that we start off a new series and maybe the bulls have some ammunition to fight back today. So let's see how that goes. But the last few sessions, 950 points down is what we've seen in 6 straight sessions. But plenty of stocks to discuss. Ajay Bodke joins us to tell us and help us out with a couple of fundamental thoughts. Hi, Ajay. Good morning. Thanks so much for joining in. Well, let's talk about the FMCG pack. You have Colgate that delivered its set of numbers. Top-line growth wasn't great, but margin expansion came about. How did you read those numbers and your approach to the stock?
Good morning, Nigel, and thank you for having me on the show. I think broadly the numbers were in line with market expectations. I think the sales growth at around 6%, and the PAT growth of around 23% was broadly in line with market expectations. I think what is keen to watch in case of companies, in case of Colgate, is the 3 initiatives that they've announced. I think the restaging of their largest selling toothbrush, Colgate Zigzag, is what they're going to emphasize going forward in the second half, along with the relaunch of 2 key toothpaste products, Colgate Max Fresh as well as Colgate Strong Teeth. If you look at the earnings growth expected over the next couple of years and the valuations, I think there's not much scope for further upside out there, because although in FY24, I'm expecting 25% earnings growth, as we move forward, in next year, I'm expecting it to come down and moderate to 15%, followed by only 11% in FY26. And then we juxtapose that with what the valuations the company today is trading at roughly 42 times FY24 earnings and around 36 times 1 year forward earnings. So although the ROEs continue to remain extremely high at around 75% for the current financial year, expected to go to 80%, the growth dynamics as well as limited scope for improvement in margins, I think makes me worry about any further entry into Colgate at the current point in time. Although I think the optimists would argue that there is still huge room of growth. And that sounds counterintuitive because, all of us think that the category has traded a lot. But certain surveys done have shown that 80% of urban India does not brush twice. And 55% of rural India, I think they do not use the toothbrush daily. So that's the statistic that makes the optimists believe that there's still a lot of runway for growth in the rural areas as well as on the urban areas. And that's why the drive to make people brush in the night from the company's end.
Okay, that's Colgate. Ajay, hi. Good morning.
Hi.
Let's get your thoughts on a couple of these banking and financial numbers that have been pouring through. I don't know if you've had a chance to look at the banks. I remember PNB's numbers were pretty decent. I mean, asset quality was showing improvement. We don't say that about Punjab National Bank too often, right? Margins, I think, were up a couple of basis points. Canara looks steady. What's your sense on this space? Because here is where we've had this absolutely breathtaking rally as well in stock prices. What's your take on this part of the market?
Yeah. So we have had a look at the numbers, and I think the pre-provisioning numbers are exactly in line with the market expectations. And the earnings beat, which is eye-popping, some 327% growth in earnings on a YOY basis, has primarily been led by the lower provisioning. So that's been driving the earnings growth. Because if you look at the NII growth, I think at 20%, it is again broadly in line with market expectations. Loan growth, I think, has held up quite well for a bank of that size at 15% or 3% on a quarter-on-quarter basis. And if you dig deep, I think that's mainly been led by improvement in both corporate sector as well as retail sector. The CASA has held against your chat. So I think the other point is, if you look at both Canara Bank or Punjab, general trend in the banking sector that the slippages have declined on for all these banks, and the ROEs are coming up. I think they still are woefully low at 0.6%, and the ROEs are around 9%. So overall, I think there is still scope for a significant improvement both return ratios, ROA and ROE. And I will be very constructive in Punjab National Bank. I still see some upside in case of Punjab National Bank. So I will be positive on Punjab National Bank.
Positive on Punjab National Bank. Got it. Ajay, good morning. Any thoughts on names like Dixon, which also reported? Actually, Dixon and Amber, if you have views.
Yeah, I think on the entire space, electronic device manufacturing, I am constructive, Prashant. And Dixon numbers also sort of, are quite impressive. So I'll be positive on Dixon. I think I prefer Dixon over Amber.
All right, Ajay, thank you very much for joining in. Good to get your thoughts on a couple of these stocks and sectors. You have a great day, and we look forward to connecting again soon. Need to get into a break right now. We'll come back on the other side. We'll have Anuj joining in with his thoughts on today's setup. And then Manoj Vishwanathan of Home First Finance joins in to talk about the company's Q2 performance. Stay tuned for that.
Okay, welcome back. There's 15 minutes to go for the pre-open session. Anuj is here to run us through the trade setup as he sees it. Anuj, good morning.
Morning, Prashant. You know what? Before I talk about today's trade, there's some interesting patterns developing. First, let's look at the Nifty's chart. I mean, if it's ready, yeah, there it is. Now, this is a chart. Now, you know what you don't see here is a line that I had made, but that line is somewhere around here, which is 18,600. The 200-day moving average, also the point from where we had a big rally. So in that sense, 18,600 is a good point. And normally the first test of 200-day moving average is defended. Now, the other interesting point that I'm looking at is FII positioning at the start of a series. We are down to now almost 10%, 90% shorts. Last time it happened was in March 23 when we had an 800-point rally. And that was not alone. In the previous two instances, last year also, when FII positioning had reached about 85 to 90% shorts, the market had a big rally. Now, the history doesn't have to repeat itself, but in most cases, it normally does in stock market. So that's, I think, maybe a hope or whatever, but it looks like the market may be trying to create some kind of a bottom. The other thing is that yesterday, in the last hour, the market had some signs of recovery, especially look at what happened to the advanced decline yesterday. This is yesterday's advanced decline. If we had traded for half an hour more, this green line perhaps would have overtaken that red line. After starting with such a massive gap, we actually ended pretty close to being even Steven on the advanced decline. Look at the intraday charts of the mid-cap index and the intraday chart of the small-cap index. Both these indices actually had a smart recovery. Mid-cap index at one point was down 1,000 points. It ended with 400-point cut. And small-cap index actually ended at the highest point of the day, so 36,206, which was almost the high of the day. And some cash stocks recovered between 5 to 15% in trade yesterday. I'll just give you some examples. For example, take a look at BSE's intraday chart. That would come up for you on screen. And that stock actually recovered more than 10% and ended a day low, in fact, a day high. In fact, at one point, it was down 10%. There were other stocks as well, like Zomato, for example, or SJVN. But the limited point is that a lot of stocks, especially cash market stocks, did see a sharp recovery by the end of the day. Now, that's the basic sense of the last hour trade. In terms of today's trade, there are a couple of levels that I'm watching out for. First is 18,700 on the Nifty. That's put option based. And the bigger support is 18,607, which I just described as the 200-day moving average. Let's see. The first test is normally defended on the Nifty. On the Bank Nifty, that's an index which has become decisively weak. In fact, it's become so weak now that it's almost capitulating. And look at HDFC Bank, for example. Now, first support is 42,105, yesterday's low, but the next big support only comes in here at 41,500, and all rallies in Bank Nifty are vulnerable to be sold into.
Okay, absolutely. We'll watch out for those levels, Anuj. Thanks very much. We're still some distance away from the 200 DMA on the Nifty. So let's see if the bulls can have their way this Friday. Well, with that, let's move on to our first corporate conversation on Bazaar this morning. Home First Finance reported a strong set of numbers for the second quarter with robust business momentum. The company saw its disbursements surge as well as assets under management seeing a healthy jump. Manoj Vishwanathan, Managing Director and Chief Executive Officer at Home First Finance, is with us. Manoj, good morning. Thank you very much for taking the call. I actually want to start with this really strong business momentum that you have showcased. I think if I look at it quarter on quarter, then the growth is 7.5%, whether you look at disbursements or AUM growth. And year on year, these numbers are showcasing growth of about 35% or 33%, depending on which metric you're looking at. The question is, how sustainable is this? How confident are you of driving this growth forward into the rest of the year?
We have been looking at a 30% growth for this year, and we are currently tracking to that. So we are, if we see the activity on the ground, the demand, from customers who are building affordable housing, it's fairly strong. So even for the next 2 quarters, we are looking at a similar kind of growth, and we are overall looking at a 30% growth for this year.
Okay, all right.
Mr. Vishwanathan, good morning. You'd said that you expect to do this 30-35% growth for a number of years from here, right? I mean, so that remains on track. I'm just kind of extending what you said. You'll do this.
That's right. So yeah, since the last 3 years, we have been saying that we'll grow at about 30%. We have sustained that till now. At least our outlook as of now, looking at the activity on the ground, we are confident that we can maintain this pace for the next couple of years.
Yeah, just one question, and we'll get into the numbers in just a bit. There has been, the premium end of the market is where we all focus on generally. The affordable segment has kind of dropped off the radar for the last, actually many years now. But of course, there is a demand, as we can see in your numbers and other financials numbers as well.
Right.
Is help required in that segment from the government, or you think it's chugging along nicely on the affordable side?
It is chugging along nicely, and the government also has been helping. And the Pradhan Mantri Awas Yojana did a lot to provide a thrust in this segment. So that that scheme was on for about 5 years, and that really gave a lot of thrust in this segment. I think various schemes for boosting up manufacturing are also helping, because this is a segment that is actually very dependent on employment. So as employment gets generated either directly through manufacturing or indirectly through ancillary units, etc., that definitely gives a boost to the segment.
All right. Hi, Mr. Vishwanathan. Good morning and congratulations on a good showing. You're targeting an AUM growth of around 30%. Tell us about the LAP book. That's, I think, around 12% of the mix. I think you were indicating you want to take it to mid-teens. By when does it go? I think to around 15% odd, point number one. And point number two, on the NIMs. The cost of borrowing has been moving up. Do you think it's peaked out now? So what should the trajectory be in terms of NIMs? LAP and NIMs. Go ahead, please.
Sure. So on LAP, we are currently clocking about 15% when you look at our disbursal rate. So on the disbursal of 959 crores, we have booked LAP of about 15%. So that catch up on the AUM will also happen. So currently we are at about 12% of the AUM. So that is going to catch up to 15% probably in a few quarters. So that's on the LAP. And as far as NIMs are concerned, yes, we feel that interest rates, at least for now, have kind of flattened out, and so we should be able to sustain the NIMs going forward. But if there is any spike in the interest rates, we will have to see. There could be some reduction in the NIMs.
So
but as of now, I think the feeling is that
hold around 6%.
That's right. So if there is no major increase in interest rates, we should be able to sustain NIMs at about 6%.
6% would be the level to watch then. Got that. Let's just talk about asset quality. That was the only slight, niggling worry in this quarter's print, if I can call it that. The GNPA level has risen to about 1.7%. What are the trends that you're forecasting and how are your buffers looking like?
The asset quality we are fairly confident of because if you look at our early delinquencies, if you look at the 30-day past due, that is stable. It's the same as last quarter, 2.9%. Yes, there has been a 10 basis points increase in GNPA, but in the first half of the year, there's generally a little bit of a spike in the delinquency numbers, and which generally comes down in the second half. That's generally been the trend, even prior to COVID. So we are absolutely not worried at all. And if you see our bounce rates, they've actually come down this quarter.
Mr. Vishwanathan, final question before we let you go. AUM growth is going to be good. NIMS is going to be holding strong as well. So AUM, in all probability, will be more than 10, 12, 15,000 crores in the coming years. Investors will be quite excited, but the street fears about supply pressure. Have you heard any kind of communication from the promoter entity, that's the PE, or from Warburg that had a big stake? They have trimmed off stake, both these two. So any further supply pressure are you expecting, or any kind of communication?
No, we have a very good understanding with the promoters and the investors that we will do, very careful structured exit, in the coming years. So what we are looking at is maybe a one transaction per year, and that's what we have agreed. So there will be a very structured exit. There will be no, regular supply in the market.
Okay, all right. Fair enough. Good to hear that, Mr. Vishwanathan. Appreciate you joining in, and thank you for your time here on CNBC-TV18.
Thank
Good
you
luck.
very much.
We'll take a very quick commercial break here. We'll come back and we'll get on our technical experts to tell you actionable ideas from here. Stay tuned. That's coming up. Okay, welcome back. We're just sort of ticking closer and closer to the pre-open session. Our technical experts are with us, and Shrikant is with us. He's with, of course, Kotak Securities, and we have Kush Bora. He's founder at kushbora.com. Good morning, both of you. I just want to quickly, before I sort of ask you for your views, for our viewers, just sort of put out a couple of stocks and the way we saw recoveries kick in, right? While you'd think that the market has been under pressure and things have been sort of going down south very fast, and it's been a very rapid fall, absolutely no doubt about it. But yesterday, we saw very large bounces. Now, these are, bounces, intraday bounces yesterday from the day's lowest point. So look on your screen, Jindal saw 18% recovery from the day's low. Something like Apar Industries, 14% recovery from the lows. BSE ended higher by 13% bounce. Prestige, 11% bounce. You had Mazgaon, Sonata Software. We had a company with us in the morning yesterday. Shriram Finance bounced 8%. Angel One has been strong. Angel One, by the way, through the last 6 days is actually up 21%. So it's gone the other way, even as the market has lost on the Nifty at least 1,000 points and maybe a bunch more. So, there were maybe telltale signs that the market, at least in the small cap side, right, for 2 days in a row, if you look at the Nifty, the mid cap index, the bank Nifty and the small cap index, the small cap index has been losing the least. Day before yesterday it was down 0.25%, and yesterday it almost came back, it almost closed in the green with a very strong recovery in that sense. So, with that as a bit of a preface, let's get in Shrikant and Kush, who are with us. Gentlemen, good morning again. Shrikant, to you, your thoughts on the index and, what's the trade setup looking like to you? What would you advise?
Good morning, Prashant. Good morning, everyone. Yeah, I think what you said is right. Like yesterday, we saw some sell-off in the frontline stocks or in the large cap companies, but mid cap companies or mid cap stocks recover sharply from their intraday lows. And it happens whenever there is like specific amount of correction which is like going to complete. So based on the technical formation and the way the zigzag formation ends, I think we are like very close to the completing points. From here, I'm not saying that the market is going to reverse the trend completely, but yes, we are going to see some rebound in the market, substantial rebound. And today, in case if we see the market is sustaining below the mark of 18,800, then only we are going to see extension of the correction in the near term. Otherwise, we are expecting market to rebound to the next levels of 19,100, where the market has left a bearish gap. So what is important is that we need to see that whether the market sustains above the levels of 18,950 or not. If it sustains, then we can expect rebound in the market and pullback in the market. For the bank Nifty, here also we saw good amount of sell-off, and it is mainly because of Prashant, the way the FI has sold 12,000 crores of investments in last 3 days. So maybe because of that, the bank Nifty is not finding any support. But today, in case if there is any bounce back, then close to 42,750 or 43,000, we can expect a pullback.
Okay, got that. Let's bring in Kush Vora into the conversation as well. Kush, hi, morning. How are you reading the signs, and do you think we'll get this much-awaited bounce back today?
Hi, morning, Sylvia, and good morning to all the viewers. Well, in one word, my answer is yes. I would love to see that bounce as much as, everyone else on the street. But let me just approach this from, a more actionable trading perspective. A short trade from here on is going to be an extremely brave move, isn't it? So the only options are to either wait it out or venture a long trade, for the rebound. Now, I fall in the second camp. Now, while it's difficult to time these rebounds and, pinpoint the exact low that the market would make, it's safe to say that we're in an oversold territory on the indices, as indicated by RSI and PCR. So perhaps it's not a bad idea to venture a long trade from here on the indices. And I agree with Shrikant. Nifty Bank is under a lot of pressure, and it's due. The rebound here should be sharper. The only thing is that this is an FII favorite space, and FIIs have been on a selling spree. So, the pressure could linger for some more time on the bank Nifty. While we do expect some sort of rebound here as well, it may not exactly outperform, the Nifty, at least in the near term. 18,600 and 18,100 is the range that we're looking at, on the Nifty in the near term, and 41,700 and 42,600 is the range that we're looking at on the bank Nifty.
Okay. Got it. So too late to sell, and it would take a brave person now to do that after the decline. So well put there, Kush. Let's talk about specific stocks, Shrikant. What do you have on your list?
Yeah, Prashant, I would like to go with a few auto companies because most of them have fallen to their extreme levels in the near term. And whenever there is a start of the fresh series, we see some activity in auto companies. We like Tata Motors, which is currently around 625, 630. Here, we should look for taking some contra bait with a stop loss at 620. I'm expecting stock to move towards 640. So Tata Motors is the first stock to buy for. The other stock on which we are specifically bullish is Axis Bank. And the reason is because, again, it has fallen to its important supports. Currently, it is around 970. From here, the stock can go to 1,000, 1,010. Keep a stop loss at 960 and create long positions on it. And on the other side, if like the market remains weak, then UPL, United Phosphorus, looks weak because it has broken its important support at 570. The next level to watch out for would be close to 530, 520. So it's a short at current levels, UPL, with a stop loss at 580.
Okay, got that. By the way, we're getting the pre-open rates now, and they're suggesting a 40-point pop on the Nifty, at least as of now, with a lot of banking stocks pulling up on the upside. That's the Nifty in the pre-open. Kotak Mahindra Bank, Axis, SBI, these are names on the upside. Reliance has started positive in the pre-open session, indicative session, that is. TCS, HCL Tech, a couple of IT names also looking good. So let's see, 40 to 45 points higher on the Nifty in the pre-open. That's how it's playing out. Kush, what about your stock trades for the day?
Well, since we are playing for that Shriram, I have two trades and both of them on the long side. The first one is L&T Finance. The stock was actually, gathering momentum before, the market dip sort of came in. But even then, if you see, on the weekly charts, the stock's taken, support at a crucial juncture of about 128. So from here, L&T Finance is one stock that I have on my radar. For the bounce, 134 and 138 are the targets that I'm looking at. 128 would be my stop loss. My second pick is, Newgen Software. This stock wasn't really as perturbed or as disturbed by the market fall and, sort of held its ground. So that's a sign of, relative strength. For me, 1200, 1250 are the targets that I'm looking at. 1130 is where I would place my stop loss.
Okay, all right, Kush, thanks a lot for that. Well, let's get in Manoj Muralidharan, who joins us to give us his derivative strategies. Hi, Manoj, good morning. I hope you're feeling good this morning. There is some bit of optimism that we see a bit of a bounce. What are you expecting on the index? And give us a couple of your trades.
Good morning, Nigel. Nigel, it is simple. We just look into the quantitative way of what the market stands is. Now, when we started the October series, the FII had a good 70% short position, but the implied volatility, which is a trigger for the market nervousness, was around 11%. But this time we are at 89%, and unfortunately, the IVs for the Nifty are shot up to 14%. Now, we all understand the maximum volume happens in the market is an index option. So the implied volatility certainly plays a role into the sentiment of the market. So an increased IV to 14% certainly says there is some nervousness. So obviously a bounce might get sold in. Now we believe that the bounce might qualify as a 19,050 for the Nifty in the short term, and that might be somewhere close to 43,000 or 43,300 in the Bank Nifty. So this entire positioning that we have for the November series, FIIs, as well as the 1.1 crores of open interest that the Nifty is starting in, has a weighted average short position of something close to 19,300. Now we believe for the November series, which is the longest one, the expiry is on 31st, 30th to 35, which is a good 32 days. This might act as a resistance. And somewhere close to an 18,600 or 500, that might be, the support. So to play the short term, that is today's trade, 19,000 in the spot, that should be a level where again some shorts might come in and Nifty might enter into a range bound session for the weekly expiry. But sell on rise certainly is the trend for at least in the short term. And like Anuj was mentioning, every time the FIIs have feeble long positions, almost 11% is what they have this time. We have generally seen the market pull up. So that pullback should be used to sell. We like two stocks. Coal India, we believe there is good positioning, buying happening, and the stock has a potential of 322. So we recommend buying it close to 300 to 305 with a stop loss of around 295. The second stock is we like Ipta Lab, and we believe that 970 is a good support. With that as a stop loss, the stock can be bought. The target can be closer to 1,000 on the stock.
Okay, Manoj, got that. Thank you very much for all of the trades. There you have it, the technicals and the F&O. Let's move on to a couple of the stocks that are going to be in sharp focus today. We have Abhishek joining in. Shriram Finance came out with, of course, numbers that were looking good. And I think a couple of brokerages have now sounded an optimistic note on it as well. Abhishek, tell us.
Well, to begin with, Shriram Finance in their con call have actually increased their AUM guidance and other guidance as well. So the AUM growth guidance has been increased to anywhere between 18% to 20% from for FY24 from the earlier guidance of 15%. Credit costs will be maintained at 2%. Cost to income ratio will come down to 27% in FY24, and the net interest margin range has been increased to 8.5% to 9% from the earlier guidance of 8.5% net interest margin for FY24. FY24. So we have CLSA on Shriram Finance. They have outperformance rating, target price of 2050. They say that the low growth momentum is healthy while margins actually surprise positively. So they have raised FY24 to 26 EPS estimate by 6 to 10%. And we also have HSBC on Shriram Finance. They have a buy recommendation, target price of 2,300. They have increased the FY24 to 26 EPS estimate anywhere between 3.5% to 8% to reflect the improved AUM growth and margin outlook. So they have also increased the EPS estimate, and now they are valuing, or as per their target price, the stock should be valued at 1.5 FY25 book value. Back to you.
All right, Abhishek, thanks very much for that. So that is Shriram Finance. Another management you will hear from on the program a little later. But Dixon is the other one we want to shine the spotlight once again on. Numbers came through. Surabhi is here with details. Surabhi.
Thanks so much for that. So Dixon, really strong set of numbers, revenue growth in excess of 25%, gross profit margin expansion of 100 basis points, and that has flown to EBITDA as well. EBITDA up 37%, margin expansion of 20 basis points. Now, what has really worked for Dixon this time around is the growth in the mobile and the EMS segment, which contributes nearly 60% of their revenues. So mobile segment revenues were up 77% on a year-on-year basis and 57% sequentially. The margins were up 60 basis points and 30 basis points sequentially, and this is because of sharp revival in the Motorola volumes. Now, what could work ahead, for the company is that they are in final stages of discussions for orders with some large brands, mobile and laptop brands, so that could aid their revenues going forward. Also, Xiaomi and itel, they will start contributing their revenues from Q4 FY24, and they are also an applicant for the IT PLI 2.0 scheme, which is a big opportunity in the laptop and tablet space. So that could, be a big trigger going forward. Brokerages also have a positive view on the stock. Investec has a buy rating. They have raised the target price to 58.50 from 5,035 earlier. Goldman Sachs has a neutral rating with a target price of 41.90, and CLSA has an outperform rating with a target price of 56.75.
Okay, got that. Thank you very much, Surabhi, for all the details on Dixon. We'll be, of course, speaking with the management, Mr. Atul Lal, in a short while from now at 9:40 a.m. So make sure you catch that interview. Back to Abhishek. PNB, which came out with good numbers, is actually up about 2.5% in the pre-open even now. What's the street view on the stock now, Abhishek?
Well, it's a mixed view coming in from brokerages. CLSA has an outperformance rating over there. Target price has been raised to rupees 80 per share on a roll forward basis. So they say that there is continued improvement in asset quality. Deposit accretion remains a challenge, but management doesn't want to raise wholesale deposits. They have upgraded the operating profit estimate by 4 to 9% for FY24-25. However, higher credit cost in FY24 due to increase in the provision coverage ratio leads to a 35% PAT cut in FY24. Morgan Stanley has an underweight rating, target price of 55 per share. They said that the PAT missed estimate and overall credit cost was higher than expectation. Impaired, assets have actually fallen, which is a positive in terms of sequential performance, and gradual recovery remains on track. Citi on PNB, they have a sell recommendation, target price of 51. They say that there is slow and steady improvement, but it's a long way to go. Return profile, despite a gradual improved scenario right now, continue to remain subdued with ROA of about 0.5% and ROE of about 7%. Back to you.
Okay, all right. Abhishek, thank you very much for that. We just sort of getting into market opening. There's 3 minutes to go for markets to kick off. Let's bring in Gautam Shah, who's with us from Goldilocks Research. Gautam, good to have you with us here. Good morning. Thanks very much for your time. I think you had been calling for caution. I remember very clearly the last time you were on the program. The view was that perhaps we see some pullbacks from here. We've seen a sharp pullback. It's come, as they say, markets go up, walking and come down an escalator. It's played out this time. But what from here? Are supports nearby? Or maybe with a bit of a bounce, there is more pain left? What's the roadmap in your mind?
Yes, good morning, Prashant. Yes, as the saying goes that you go up the stairs and you come off the elevator. I think that's been so visible over the last month and a half, because you had this lovely gradual rally over the last 3.5 months, and with what has happened in the last couple of weeks, I think it's really caught a lot of people by surprise. But to be honest, the writing has been on the wall. The market was in a sort of a distribution phase around that level of 20,000. You had technical sentiment, global factors all coming in together to suggest that this pullback was coming. Now, the big question is whether this is just a temporary passing correction or whether this is a downtrend which will lead to a series of lower tops and lower bottoms. We believe that this correction is very different to the last 4 or 5 months, wherein the markets corrected, tested support and came back quickly. This time, I don't think we are going to come back quickly. Yes, we've fallen about 1,200 points, 18,900, 800, 900 area is an important support. You could see a bit of a bounce, but I don't think the bounces are going to sustain. So at high levels, the market will find selling pressure, 19,200, 19,400, 450 area will continue to act as a big ceiling, but I do believe that there is a lot more pain ahead before things can get better. And it's just discounting the global factors, discounting the elections, that are up ahead, and the kind of madness that you saw in the mid caps and small caps. So putting all of this together, I think eventually the Nifty is headed towards 18,400, 500. And because there is no leadership from any of the major stocks or major sectors, I think it's going to be difficult for India to come back very quickly, unlike the past.
18,400 or 500, you said, Gautam, right?
Yeah, I think that's been our working target, 18,400, 500 area, because that's where the next inflection point is based on a number of supports. Not to say that that's my worst case, but I think we could even go lower than that.
Okay, hang in there. We're going to talk about that worst case because we need to brace ourselves for whatever might lie ahead, right? So we'll talk technicals, but let's get through the opening rates before that. Just a couple of seconds to go. For what it's worth, today the screen is starting off with a bounce. Key question, will it get sold into or not? We're starting with about an 88-point gap up on the Nifty straight away. The pullback is visible across the sectors, across, most stocks. Almost all stocks, barring an Asian Paints and Lever, are in the green on the Nifty. So what is rising highest? Adani Enterprises is the winner right now, about 1.7% up. Then you have a lot of the heavyweights, Reliance, ICICI Bank, HDFC Bank, Infosys, all your big boys, State Bank of India, all of them are pushing up to the top side. Good pullback in a couple of names on the tech side as well. Wipro, for instance, is up about 0.7%. TCS is very quiet, just about a 0.25% higher. Infosys is better compared to the others. You have Bajaj Auto that's looking up about 0.6% thereabouts. Coal India, Hindalco, metal names are holding out pretty okay for the time being. Sun Pharma is up. Taro's numbers were good, Ekta was telling us. So this looks good for the time being. Dr. Reddy's reports numbers. Stock is quiet. And I said consumer, as I said, consumer is selling off this morning. Lever, Titan, Nestle, Tata Consumer, Britannia, even ITC for that matter. So FMCG and consumer is a no-go zone. Rest of the market starts pretty optimistic, Nigel.
Well, that's right. Let's run you through some winners and losers then. Shriram Finance, that stock is flying away. The numbers look good. The commentary as well was good. We'll be joined by the management in a short while from now. The stock up 6%. PNB came out with a set of numbers. They looked more good than bad. And in fact, yesterday as well, we saw a bit of a recovery from the day's low. The stock is up close to around 2%. Dixon, good performance, particularly from the mobile division. We'll be joined by the management in the next 10 minutes or 15 minutes or so. That stock opens up the gain of around 2.5%. How do they ramp up from here on is going to be important, and trajectory in terms of margins as well. Venus Pipes, well, that's another stock that delivered a fairly good set of numbers. It's been a big outperformer, but those numbers look pretty good. Capacity expansion coming on stream and backward integration. So that one initially as well was up close to around 5%. Suzlon Energy, that one did see a recovery in yesterday's trading session. It returns back to its winning ways, so that stock is up close to around 3%. SCPC, another stock in terms of high volume movers this morning. That stock as well is higher in the green as we speak. I think it was up close to around 6%. SCPC, one of the top volume movers. On the downside, MMTC, well, that's one stock that's under some pressure. That one has seen a correction from 85 to around that 52-odd mark. Currently down close to around 2%. And I think Westlife Food as well, the initial tick was in the red. They'd come out with a set of numbers. We'll be joined by the management at around 10:30 a.m. today. So Westlife as well comes up. It's down close to around 5% as we speak.
By the way, Shriram Finance, just adding one more stock to Nigel's list. I don't know if you spotted that or not. What a move on Shriram. 7% on the back of the upgraded outlook.
Surbhi, it's one of the largest NBFCs. I think almost, I think the AUM should be closer to 2 lakh crores. And it used to be at least the cheapest, in that size of companies. And it's making up big time. Over the last 6 months or so, it's done phenomenally well. It's kind of woken up. So 1920 or so is where Shriram Finance is trading at. The market's doing well, right? I mean, 86 odd points, so we were up almost 100. And we are up about 87 odd points higher. 18,944 is where we find ourselves at. Just a quick look at the Nifty Bank, which of course has been the vastly more weaker. That is also trying to come up a little bit. It's up about 0.6% or so. So let's see how far, how strong we are able to go. Well, just a few other names, right? BSE. We were toying with 1800. Now BSE has moved up almost to 1900 kind of levels now. 1870 or so on BSE. That's the one. Big 13% recovery from the day's lows yesterday. RBL Bank, and these are some of the largest volume traded names here in the market. RBL is up 3%. Because over the last couple of days, while markets were in a turmoil, numbers and earnings, etc., took a bit of a backseat, right? Because the overall driver was the fact that markets were selling off, and it was global-led. So there will be, and because we're in the earnings season and there have been disappointments and there have been surprises, I think you will start to see, if the market stabilizes a little bit, reaction to the earnings, even from a few days ago. Indian Overseas Bank is another one, but kind of slightly higher, only slightly higher. Adani Power had seen a big move from the day's low. Stocks up about 2% here. Jindal SAW had, these are all names we put up on that screen earlier. Jindal saw a 10% plus move from the day's low. It's up another 2% this morning. I think Nigel mentioned Venus Pipes, 6% higher, 1373. Credit Access is another one, right? I mean, 3.5% on Credit Access, almost 1600 on that one. CDSL is up about 3%. Again, huge volumes here, 1328. Union Bank is up about 2.33%. What else? I mean, Bank of India comes up with about a 2.5% gain. Karnataka Bank is up almost 4%, 230 on Karnataka Bank. Lemon Tree is up about 2.25%. So yeah, there are lots and lots of names. Market breadth to begin the day is up 8:1. 250 stocks are lower, and you got almost about 1,700 stocks which are higher. This is across the board on the NSE. So that's the picture as things stand right now. JSW Energy had a bit of a whipsaw. Day before yesterday, it sold off. Yesterday, it bounced quite sharply. It's starting the day about 1.5% lower. And MMTC is another one. We've highlighted this quite a bit. In the last 6 sessions, MMTC is down some, I think, 40% or so. So it's, I think, right there on the top of the losers list if you sort this by the NSE 500 group of stocks here. So 85 points higher on the Nifty. We're at about 18,942.
Well, indeed, it floated like a butterfly, MMTC. Now it's stinging like a bee from around 85 rupees all the way.
Not a small
Well, that one, you just pull up the last 1 week chart, it'll tell you the picture. So we've been warning our viewers out there about some of these low liquidity stocks. So please take some of that caution on board. But otherwise, it's a good start. After a while, the bulls will be raising their bat and saying, we have almost got a century, to kickstart trade, which is good, but can we build on from here? We were in conversation with Gautam Shah. Gautam, hi, good morning. You've already given us your view on the Nifty. And the pain point for the markets really has been the Nifty Bank. That's a relative underperformer. Fundamentally, if I look at it, the profitability of the banking names have done well. But the stock prices haven't reflected that. Technically, though, how are things shaping up on the Nifty Bank?
Nigel, just to add on the Nifty, a 100-point move is 0.5%. I think there was a time many, many years back when it used to be 1%. And we used to be very excited about a 100-point move. To be honest, it's pretty normal now. A 200-point move is a 1% move.
But Gautam, after the kind of pain, it's like quite a few batsmen are already down, and then you have that middle order that comes in there, and at least they're scoring some runs, So in that context, it's not too bad. But you're making a point. Go ahead.
Yeah, fair enough. I think this pullback was anyway coming because yesterday was an expiry day. Just too much happened across the board in terms of pain points. But still, I think talking about the Bank Nifty, that's the problem area for the market. Because even when the Nifty tested a level of 20,200, this was the index which really did not participate as well. And we've seen huge underperformance from a bank like HDFC Bank, despite all the talk around the fundamentals, which is obviously super quality, top quality, but the stock price just doesn't perform, and it's been in a sort of an underperformance phase for almost 18 months. Look at it on the ratio charts, which is HDFC Bank divided by the Nifty, and you will see that this underperformance is here to stay. So I think Bank Nifty is still a big problem. There are no signs of bottoming out. I think you are going to see a lot more weakness. Our near-term working target is about 41,500, but I do believe that the Bank Nifty eventually will go below levels of 40,000. So if that were to happen, I think the Nifty will also see a bit of a downtick. So I really don't see leadership coming from anywhere. When banks don't do well, Reliance is in a bit of a difficult space. ITC and L&T seem to have lost their leadership. IT has lost the plot a bit in the last 1 week. I don't see leadership. So I think at best this market can stay in a range, but there will be a lot of pressure from high levels, given the fact that the global scenario has changed quite a bit in these last 10 days.
And that is exactly what I wanted to talk to you about, Gautam, which takes us back to that point, right? I mean, Bank Nifty below 40,000. By the way, give us that lower target on the Nifty. You said 18,500 is near term, and then we might be prepared, or we might want to be prepared for slightly lower levels. So lower target on the Nifty, and then the global picture. Tell us more about that. What is the most worrisome indicator that tells you that maybe there's a bit of a global downturn that's coming?
See, I think we actually started getting cautious at levels of 19,700. To be honest, we put it out in our big picture report last month. And I think our working target is still at 18,400, 18,500. And I think that's a very important support. And we might not break that in a hurry. At least you will see a pullback from that level before we go lower. So I don't want to give any numbers below that. However, having said that, this entire move that financial markets have seen is global in nature. Till a couple of weeks back, financial markets were resilient to the geopolitical developments. And we all thought that why is that markets are, behaving so strong? And now it's actually aligning itself to the kind of news flow that we've witnessed over the last few weeks, which I think is only fair. I do believe, given the move in gold, given the move in Bitcoin, the market is a little concerned, and you are seeing elevated VIX levels, around the world. If you look at the world markets in general, the Russell 2000 in the US is near a 52-week low. The Nasdaq is at a multi-week low. Nasdaq was the star performing index for a couple of months, and people said that because of the Nasdaq, the entire US market will get bailed out. That's not happened. You are seeing cracks in some of the bigger stocks in the Nasdaq, whether it's a Tesla, Apple, Nvidia. You've seen a lot of weakness there. And Asian markets, look at a market like Singapore and Hong Kong, they have seen breakdowns recently. So it's looking synchronized at this point. And because we track the MSCI World Index and the Emerging Market Index very closely, I have seen cracks there as well. So I think the global equity market landscape itself is on the weaker side. This does not look like a plain vanilla correction. I think it'll get a lot weaker before things get better globally.
Yeah, I mean, the Russell 2000, I think, is almost, if you define a bear market as a 20% fall, I think the Russell is already there. And take some of the points that you put out there. So, Gautam, so two buckets then. Which is the most vulnerable space in the market here? If you can name names, that'll be fantastic, useful for viewers. And on the other side, which are the relatively immune or even strong, right? I mean, actually, I sorted over the last 6 days or so, I sorted the NSE 500 group of stocks, and I came up with a few names which are actually between 10-20%. So where would you look for relative strength on the other side?
Well, in terms of weakness, I think it's pretty much across the board. If you look at most of the sectors, they're trading above the moving averages. They've all broken their support levels. Nothing really has held out. I mean, look at the kind of weakness many mid caps and small caps have seen. But I think the only space which I feel can really stand out is pharma, because traditionally it's known to be a defensive space which can do well in difficult times. Good chart. And I do believe that pharma, and to a certain extent, top quality IT will stand out. So these are the two spaces that we want to look at. And I think, the point which I'm trying to make here is the only reason why India might not fall as much as some of the other markets in the world is the 16,000 crore SIP money that comes in every month. Now that's sticky money that will keep protecting our market. But I think with the craziness that you saw in the mid caps and small caps over the last 4 months, there is a scope for a lot more weakness in that basket as well. So I think the advice to your viewers would be to stick with top quality, stay with industry leaders, stay with industry challengers, stay with companies with great fundamentals and institutional action. In case things get worse from here, which is my view, then I think those stocks and those sectors will actually bail your portfolios out.
Any stocks come top of mind, Gautam? Very, very valid advice out there. The SIPs actually have been really good, and everyone asks why the market's resilient. I tell them because it's because of you, because of your SIPs. So in terms of names, anything on top of mind, good quality, high pedigree, looking good on the charts. Any names you could share with us?
Well, unfortunately, I don't have too many names apart from maybe a couple of names in pharma, which could be a Dr. Reddy's or a Sun Pharma or a Divi's Lab, which I think can really stand out. And in the IT space, maybe a TCS or an HCL Tech, which I see standing out. Maybe L&T after a bit of a correction. But let's look outside of equities. I think the bigger trade right now is gold and silver. I think we've been a big bull on it for a year now. And once gold starts trading above levels of 20,000, it might actually give equities a run for their money. And you might see gold at lifetime highs very soon, and maybe even levels of 2,400, which is a 15 to 20% move from current levels. So gold and silver, we are actually very kicked, and we've been recommending our subscribers to actually top up in case you're taking profits or exiting in some equity positions.
Gold. Buy gold. It's anyway Diwali season. I think a lot of people will be very happy to take that advice, Gautam.
I think we know who's going shopping this evening.
Just checking. All right, Gautam, great talking to you this morning. Thank you very much for joining in. You have a great day, a great weekend, and we look forward to the next chat. Well, for the time being, the market is actually holding on to the gain. So, yes, we were talking gloom and doom from a more medium-term, possibility scenario. But for the time being, the market's held on to that 100-point move up on the Nifty. In fact, Infosys is doing very well right now. It is the leader on the Nifty, 1.5% higher. Then there are a couple of banks giving it company. SBI, for instance, is managing a fair amount of move. But IT really is a leadership sector today. Wipro, HCL Tech, quite a few of these names on the upside. And then Reliance is a support. At least for what it's worth, right now it's up about 1%.
Surabhi, Westlife, I just want to put out that name. It's down 6.5%. That's, the McDonald's franchise, both in the West and the South. That's at about 827. That is coming through. It started lower. It's not as if it started higher and then sold off, but it's down sharply for now. But that's the only one which comes up with any meaningful decline. Otherwise, it's a up and up day. And what is really leading from the front is Shriram Finance, which is now up almost 8.5%. And of course, to boot, lots of PSU banks, Surabhi, are doing well as well. And I think we've got Canara joining us now.
Absolutely. So let's straight away get to those numbers in that conversation. The bank in the second quarter came out with its best deposit growth in 6 quarters and best loan growth in 4 quarters. Slippages have declined and ROA is looking quite good as well. Deposit growth, one can argue, is maybe a little weak. Well, we have, the CEO and MD of Canara Bank now joining in. Sir, good morning. Thanks so much for taking this call. I want to start first with the margin question, because when we got into the quarter, the entire street was worried about margin compression. And for you, that's not happened. Actually, there's been a small improvement, not improvement, but at least you've held things steady on a quarter-on-quarter basis. What is the outlook on the cost of funds and margins going ahead?
No, definitely, we are able to maintain in the first 6 months. But there is a pressure on the interest expenses because the incremental growth deposit, whatever, to meet the requirement of the credit demand, double-digit demand, we are able to rise from the retail term deposits, majority, and partly from the low-cost deposits. But the low-cost deposit growth is not at par with that the retail term deposit growth. That's why the cost, little bit, there may be a chance of moving up in the coming quarters. So the NIM may be able to maintain a 2.9 to 3.05% in between these two things if the market conditions continues in the same level. If the liquidity improves, we may again able to maintain.
2.9 to 3.05%. That would be your range for margins for the rest of this year.
Yes, madam.
Okay. All right. Sir, hi, good morning and congratulations. Pretty good showing this time around. Your loan book, your book is currently, I think, around 9.3 lakh crore approximately. And I recall the gold part of the book had grown very well. A few years ago, it was around 80,000. Then it jumped to around 1.2 lakh. What is the updated number out there in terms of your gold book? And how do you see that scaling up from here on? I think it used to be mid-teens as a percentage. Tell us what's the updated number.
The latest it is 1.4%. It is growing year on year around 27 to 28%. The major thrust is actually the speedy disposal of the request. For that, we have identified several branches, almost 6,000 branches, mostly in the South India. And we have created separate counters for these, particularly jewel loan disposals. When somebody comes for the jewel loan, it is an emergency.
Right. So just to interrupt, 1.4 lakh crore, I think you were referring to, right? In terms of their absolute number.
Yes, sir.
Okay, you're making that point. Please go ahead, sir.
1,000 crores. That's it's a walk-ins are improving a lot. It's not that we are paying a separate attention on that and all. I think customer confidence we could gain very much on this, if they step into that Canara Bank, they get the loan in the fastest mode. That has created, and it's performing not in one particular area, it is performing across the country. And it is a walk-in business. There is no special thrust on that and all. So only thing, whatever the initiatives we have taken to streamline that disposal of the applications, I think that is giving a results in increasing in the gold loan.
Mr. Raju, hi, good morning. Prashant here. I'm sure players like Muthoot and Manappuram have got their television volumes up listening to what you're saying. And you said that you identified 6,000 branches and you're basically going to set up separate counters for this to facilitate this, mostly in the south of India on the gold loan side. Got that. Sir, let's just talk about a little bit about deposit and loan growth. Could you tell us what deposit growth will look like from here? At what costs are incremental savings deposits coming in? That is one. Second, what is the outlook on loan growth, overall loan growth going forward?
So initially in the financial year when we commenced, we interacted with you and we are given a guidance that our total business growth will be in the 10% and the credit growth will be around 10.5% and the deposit growth at 8%. And even first 6 months, you can look at that our YoY deposit growth is above what we have given the deposit growth of 8%. Now as on date, it is 8.66%. It is in line with what we have given the guidance. Even the advances growth, though we have given the guidance at 10.5, in interactions I shared with you, saying that it may be around 12% to 13% or 14% in between that. As on date, the first 6 months, we have shown that to 12.11%. If you look at specifically this particular quarter, you just see that the RAM growth itself is more than 5% in only one quarter, 5.18%. And it is not that it is so dominating by one particular sector. And we have seen a double-digit growth in the retail growth first time. We have seen a double-digit growth in the agriculture. We are almost touching a double-digit growth in the even MSME. That means the growth is not coming from only either corporate or from one particular gold or something. Even corporate, you see that we have grown at 2.73 as against the RAM growth of 5.18 in the quarter-on-quarter basis. Our endeavor is, our impression on the branches is, we want to activate all our 9,700 outlets to contribute to the business. That has given a plus point. For that, we have introduced some transparent ranking system among the branches, among the ROs, among the circles. That ranking system, every month we are disclosing it openly, transformation to everybody. Everybody will know where they stand in that. That has cultivated some competition among the people and it has started generating some business in every outlet of the bank. The another thing, we also introduced a CRM model, that is a customer relationship model in 6,000 branches approximately, and we have created a relationship manager concept in all the mid corporate and large corporate and MSME cells also. So that has again yielded some result in getting in the form of even ancillary business, so that our CASA, you just look at that the absolute numbers. Savings bank also has increased quarter on quarter and even the first 6 months. Even current account also absolute number is growing. At least we should be able to show that growth, whatever the initiatives we have taken in the first quarter, coming out with the new initiatives and new products targeting for the sectors like an younger generation or a salaried class or pensioners, separate schemes we introduced. All these initiatives now started giving the results. That's why we are confident that whatever the growth we have shown in this will continue in the next. 12 to 14%.
Mr. Raju, if you could just allow me to come in there, sir. So your point is taken that you guided for about 10% loan growth and you're, within that vicinity right now. But, some experts on the street will argue that loan growth for Canara Bank is not as healthy as some of the peers, some of the other banks. I mean, if I'm looking at a year-on-year basis, so you don't see any reason to scale up your loan growth guidance. That's one. And on loan growth, give us some more color on retail. Your retail book year-on-year is growing about 10% or so. What's the outlook specifically on the unsecured side? Because that's where there's a lot of scrutiny. Even the RBI has been making that point. How large is the unsecured portion of your retail loan book? And do you see any cause of stress over there?
The regulator concern in unhealthy growth in the unsecured loan retail portfolio, madam. But for Canara Bank case, that retail unsecured portfolio growth is a double digit in line with our retail growth. There is no too much growth is there because we are very particular about the lending unsecured loans to the retail growth. That is, we made it a mandatory that loan will be available only to the salaried class, no other persons, and that salaried class also there's salary drawing option should be with the Canara Bank. People who are opted for Canara Bank to draw their salaries only is serving with the unsecured loan portfolio. So in that way, I don't see any issue on that unsecured portfolio, and our NPA in that unsecured portfolio as on date, it is only 8,000 crores in that retail, and the percentage of NPA is only 1.65%.
Okay, all right, Mr. Raju, thanks so much for stopping by, giving us all those details. You expect to grow more than 10%. NIMs could be in the vicinity of roughly around 3%, or in a sounding reasonably optimistic on business as we speak. That stock has moved to the high point of the day. But more importantly, the markets, the Nifty has moved to around that 19,000 odd mark, and we're up more than 130 points as we speak. 140 points now. We kissed that 19,000 odd mark. For the time being, slip into a short break. You come back, we'll be joined by the management of Dixon Technologies. Welcome back. Well, the markets are holding well, but for the time being, let's focus on the 7th edition of the India Mobile Congress, which kicks off today. Ashmit joins us on the sidelines to tell us what to track out there. Ashmit?
Well, we're just minutes away. We're moments away now from the inauguration of the India Mobile Congress. This is the 7th edition. We're only moments away from the Prime Minister actually joining us at the Bharat Mandapam here at Pragati Maidan at the heart of the national capital. Now, what's in store? Well, to begin with, the inaugural session will feature not just the Prime Minister, but also the Telecom Minister, Ashwini Vaishnav. We'll also have Akash Ambani, Sunil Bharti Mittal, Kumar Mangalam Birla. All of them will be giving us a sense of which direction in which we're moving. Keep in mind that October of last year, 2022, is when we officially had the launch of 5G, and in less than a year's time, we have a 5G rollout that's been pitted as the fastest in the world. It is in the month of August that, in fact, both the telecom operators in question had completed their 5G rollout. So now the question is to look forward. What IMC insiders, what India Mobile Congress insiders tell us is that on the looking at this IMC, we'll not just be talking about 5G and the rollout, but we will be looking at the way forward. So whether that's 6G, whether that's new emerging technologies, green technologies, cybersecurity, AI is in focus. Application of 5G technology for applications such as drone, such as unmanned vehicles. A lot of this will be on display. In fact, this is only the beginning. We're talking big numbers here. We're talking about as many as 1 lakh visitors, over 1,300 delegates, 400 startups are likely to be featured. So clearly, it's an action-packed day today, day one of the India Mobile Congress. Again, just to mention, we're moments away from the Prime Minister joining us at the Bharat Mandapam in New Delhi.
We'll keep coming back to you, Ashmit, all through the day to get tidbits of what's going on out there. For the time being, though, let's shift focus back to the markets and let's talk about Dixon Technologies. Those numbers look good on the revenue front. The margins as well look fairly good. And the top line was led primarily by the mobile division. To understand more about the past quarter and the way ahead, we're joined by Mr. Atul Lal. Good morning, Mr. Lal, and congratulations. Pretty good showing out there. The street seems to have liked what you delivered. Give us a couple of details, though. How do you see volumes ramp up, particularly in the mobile segment? For Xiaomi, what is the run rate? Where do you see it headed, say, by the end of this fiscal? And for Nokia as well, what is the monthly run rate you're looking at in the months to come? All this, what does it mean for your revenues? Last year, you did around 4,300, 4,400 crores. Where do you see this number headed by FY25? Go ahead, sir.
So mobile order book is extremely healthy. We have already started the trial runs for Xiaomi. The commercial production is going to take off from next month. And in a couple of quarters, we feel that we're going to be almost at 500,000 a month. That's the way it looks.
Okay.
Nokia, the present run rate is almost 1.5 to 2 million. And in all probability, we're also going to be starting exports in Nokia. Our other customers, which we have acquired, also get into the execution mode from next quarter. So undoubtedly, mobile is going to be the largest trigger for Dixon's growth. And the numbers are going to be very healthy in the current fiscal and, of course, the next fiscal.
Okay. Could you put a number to that, sir? By, say, by FY25, where do you see the number headed? It was only 4,500 crores. Some estimates are talking about a number of closer on 20,000 crores. That's by FY26. You want to give us a glide path?
I don't want to give you a number as such, but please be rest assured the number is going to be huge.
Okay, huge. we like huge. Well, Mr. Lal, good morning. Great to have you with us here as always. Prashant here. So that's good to hear, the mobile, and that's the single largest overwhelming segment for you still, even as you diversify into other areas. On the laptop side, sir, I think there is a fair bit of anticipation about, because last time we had you on the program, you'd left us with this sort of line that you are close to signing up one of the three large sort of laptop makers in the world, and we tried to push, but at that point, I'm assuming things were still being signed and tied up, etc. Can you tell us anything more? Has it happened?
So, Prashant, we are very, very close to doing that. We are awaiting the government's announcement of the IT PLI 2 list. We are fairly confident that we're going to be one of the beneficiaries. And the discussions with this large global brand in the IT product space is almost at the final stages. We're confident that we're going to be concluding this contract very shortly. And it should get into the execution mode in a quarter or so.
And is this, the announcement will happen after that list is announced, sir? Is that what the player is waiting for?
It's going to be aligned with that.
Going to be aligned with that.
Sir, some sense of the opportunity. I know you won't share too many numbers, but because this is going to be a wide, big avenue stream, I'm guessing, and not immediately, but I think next year onwards, there is a lot of that chatter about the curbs coming in terms of total imports of laptops. So give us some ballpark estimation of the kind of revenue opportunity that laptops will present.
So the application that we have filed with the government for IT PLI 2, we have committed a capex of 250 crores. We have filed under the hybrid domestic category, and we have committed to the government a revenue of 48,000 crores over a period of 6 years. So that's what our internal estimates and planning is. Let's see how it pans out. It depends upon customer acquisition. It depends upon deepening the value addition within India and within Dixon. So many things are linked to it, but that's the number we have committed to the government.
250 crores is the capex you've committed. I'm trying to gauge what is a possible revenue opportunity that you look at. Let's say in year one, once you're fully up and running, what could be the annual revenue opportunity, and also what does that do to the margin profile? Blended margins have come to about that 4% handle now. So as a product, as a segment, what do laptops mean for margins?
So the revenue that we have planned for ourselves in this particular domain is 48,000 crores over a period of 6 years. Let's see how it ramps up. It's very difficult to comment on that number at this stage. The margin profile in this business is also going to be around 3%. That's the margin in our EMS business.
All right, Mr. Lal, just to a quick point on this mobile opportunity for Xiaomi, is there a maximum cap that they can source from you all, 30% or 50%, or there's no cap of their requirement?
No, there's no cap.
Okay, good to get clarity on that front. Give us a few more numbers on TV sets as well as on washing machines. What is the target for this year? There has been some talk about some slowdown. I think you were looking at a number of around 3.6 million odd for TV sets, but give us an updated number for FY24. What do you do?
So last year in 23-24, what we did was around 3.4 million. Let's see how Diwali pans out. This time Diwali is late. So let's see how Diwali pans out. We still stick by the number of around 3.6 million. Okay. And in washing machine, last year we did around 1.4 million. We feel this year we should be able to close it around 1.8 to 1.9 million.
Mr. Lal, just a word on Jio Bharat as well, and how much you're looking to clock in from that side. And since mobile is growing at such a rapid, we are actually, speaking of mobiles, we are getting visuals from the India Mobile Congress. We have the Prime Minister there, and we're speaking about Jio. Well, the man himself is present, so it's interesting timing, I guess. That is a high-profile event that's kicked off in New Delhi, and our team is on ground. We will be bringing you updates, of course, through the course of the day. That's Prime Minister Modi looking at, all of the manufacturers who are present there, Airtel, Jio, and I'm sure a whole host of other handset manufacturers also present at that marquee event. So good time to be talking mobiles then, Mr. Lal. Tell us, what's the capex you'll need to put to work? What's the Jio opportunity?
So we already started producing for this anchor customer of ours. The ramp up and execution is already happening. So we feel there is going to be a large business. Yeah, let's see how it pans out. But the execution has already started. In the mobile business, we have already incurred a capex of almost 150 odd crore this year.
Okay, all right. Mr. Lal, very quickly, you spoke about some export opportunity for Nokia, but I think for the business on the whole as well, what is the current proportion coming from exports, and where do you see this number trending?
So in our last fiscal, in our revenues of almost 12,200 crores, the export contribution was around 1,000 crores. We feel that current year, it should almost double.
Okay, so 2,000 crores. And as a percentage of your revenues would be?
I don't want to give an overall figure, but as I'm saying, that the revenue growth in Dixon is going to be much ahead of the industry numbers.
And what is the industry growth likely to be? According to you, according to your estimates?
Well, it's a blended kind of a thing. It's very difficult to say because we are in various businesses. But please be rest assured, in Dixon's case, it's going to be an aggressive growth.
Okay, just one last question from my side, Mr. Lal. Since this is such a sort of booming space in terms of bringing manufacturing home, right? Import substitution in a very large way. Naturally, there will be a fair bit of competition as well. Now, globally, what we've seen is that some of these Taiwanese players are really leaders in electronic manufacturing. One assumes that they would also be, they're also already participating in many segments quite aggressively, building out plans, etc. How big a factor is that going to be in your assessment, and how guarded do you need to be?
So undoubtedly, the names, Taiwanese manufacturers, they're iconic companies, and we look up to them. In Dixon's case, I think we have acquired now adequate scale. We generate an operating leverage because across most of the businesses, we have capacities which are more than 30% of what India requires. So we generate an operating leverage. We have a huge focus on capital allocation. We are much more frugal. Our return ratios are more than 30%. The balance sheet is not leveraged at all. So at any point of time, for me to raise resources for further investments, we're all committed to it. And also, we are really working on turning in Dixon into some kind of an engineering powerhouse. And that's what the focus is now. on automation, on robotics, on manufacturing execution system, on improving the productivity, learning and development, talent acquisition. So this is the way forward for us, and we're really focusing and working on this. We are confident that we will be able to stand up to this competition.
Okay, all right, Mr. Lal, thanks so much for joining in. Congratulations on a good showing. I think last year you had given a guidance a couple of times and then, it got into a bit of a dizzy. This year, a little bit more cautious, but you're assuring our viewers and your investors you're going to outgrow the industry as well. So we'll keep that in mind. Looking forward to having a chat with you rather soon. Let's move on then. NLC India. Well, that's the next stock on our radar. The company actually reported a weaker set of numbers in the past quarter. The question is, will things improve from here on? To help us out with that, we're joined by Mr. Prasanna Kumar, the chairman and managing director of the company. Hi, Mr. Kumar. Good morning. Thanks so much for joining in. Well, the last quarter, it was you were impacted. I think your operations were impacted. Could you tell us, have things resumed? Is everything back to normal? And what can you guide us for the remaining of this fiscal?
Last 2 quarters, there was some problem in the lignite production because of land acquisition issues. And comparatively, in the Q2, the performance is better. And we now sorted out all the land issues and we got possession of the substantial portion of the land for augmenting the lignite production. So we are hopeful that in Q3 and Q4, we will be able to augment the production to the required level and reach the target by the end of the financial year.
Okay, sir, hi, good morning. Can you give us some sense of the mining business, which has been under pressure? Is that because of lower output from navally? What is the sense as you go forward in the rest of the year? What mining revenue are you likely to close the year with?
Madam, in coal mining, our production compared to last financial year is higher. But in lignite, there is some problems because of the land acquisition issues in the Q1 and Q2. But now the issues have been sorted out, and we will be producing more than the last financial year, and also we will be generating more than the last financial year by the time Q4 ends. So in both mining as well as power generation, we will pick up in Q3 and Q4 to reach our targets.
Can you give us an indicative volume growth, since you're saying it will be better than last year, on lignite particularly and even overall? I mean, total mining volumes for the business, for the company, how much will they be better than last year?
If you take coal, last financial year we produced 10 million metric tons against the target of 8 million metric tons. This year we are aspiring for 14 million metric tons. And we will be achieving the target of 14.4 million metric ton in the coal. And in lignite, last year we produced around 25 million metric ton. And we will be producing more than that in the current financial year.
Okay, all right. If you could tell us also about your subsidiary, NLC India Green Energy. How is that shaping up and what are the targets out there?
NLC India Green Energy, we incorporated to focus more on the renewable business. And all our new renewable projects will be added through this subsidiary. And already we won 600 megawatt solar capacity in the Khavda Solar Park of Gujarat and 810 megawatt in Rajasthan. So already 1400 megawatt is there under this, and another 500 megawatt also work is in progress. So almost 2000 megawatt works are in pipeline for this under this subsidiary. So we are hopeful that we will further increase that capacity.
Okay. Just your operations at Odisha, sir, if you could give us an outlook, what is the total capex outlay there? What are the kind of PPAs you've signed in? Just a sense on those those plans.
Our capex outlay for this financial year is around 3,000 crores, and we are hopeful that we will be doing much more than that. And regarding PPAs, recently we concluded all the PPAs for our Talabira thermal power station of 3 into 800 megawatt. Recently, we signed a PPA with the Orissa government. With that, the entire power of 3 into 800 megawatt is now tied up. And for Neyveli, for the phase 2 of Talabira also, we signed a PPA with the Orissa government for 400 megawatt. Our Ghatampur power project, that is 3 into 660 megawatt. The first unit is about to be commissioned in the by the next month, and we are targeting for the second unit also in the current financial year.
Okay, all right. Thank you very much, sir. Appreciate you joining in, and great conversation as always. Thank you for providing those details. Now, Punjab National Bank posted a good set of numbers. Two standout points. Slippages were at an 8-year low at an annualized rate of 0.8%, which is the lowest in the industry this quarter. Also, PNB is one of the few banks whose NIMs actually rose this quarter. There was actually an expectation of about a 5 basis point decline. We've got the Managing Director and CEO of the bank, Atul Kumar Goel, joining us now to take some questions. Mr. Goel, it's a pleasure, sir. Thank you very much for joining us, and thank you for being here on CNBC-TV18. Prashant this side. I want to start with that NIM point. There's a increase, small increase as compared to a slight decline which was expected. Could you explain that? What happened? Did yields increase? Were there other factors which were at play? What is the cost of funding in the quarter? And what's the expectation? What should we pencil in on NIMs going forward, sir?
Very good morning, Prashant, and all the viewers of the CNBC TV18. As far as you talk about the NIM also, if you see the NIM was 3.11 global NIM, and the domestic NIM was much more. The reason for although if you see the NIM from the June quarter, it has on the increased territory. The reason behind that was there is a pressure on the NIM. It is on account of the repricing of the deposit. As on date, 85% of the deposit has already been repriced, and around 15% deposit has to be still has to be repriced. That will be repriced at the time of the maturity. So we have given the guidance last quarter also कि our NIM should be within the range of 2.9 to 3, and still we are maintaining 2.9 to 3 because some of the deposit has to be repriced, and some of the AAA loan is very rate sensitive also. But last time also we have told कि whatever the NII in the absolute number, we will be in a position to maintain even more, because if you see the September quarter, there is an increase of around 400 crore rupees in the NII. So we will be in a position to maintain 9,900, even much more in the quarters to come.
Okay. Mr. Goel, good morning. The deposit cost, what was your cost of deposits, and do you expect it to rise? Because your deposit growth has not been very good. Do you think that you'll have to pay more? What was the cost? What will it rise to?
Very good morning, Lata. Our cost of deposit is 4.84. There was an increase of 10 to 15 basis point as compared to the June. So first, what you are telling ki there will be a further, because as I told earlier also, there is a still 15% of my total term deposit has to be repriced. That will be repriced at the time of the maturity. So I am thinking there will be another increase of the 10 to 12 basis point in the cost of deposit, but not immediately in the current quarter. It will take some time also. Your another question, because you are telling that there is not a growth in the in the deposit, because that is a deliberate attempt, because growth in the advances are more than 13% and the growth in the deposit is the 9.85. Deliberately, we are not giving the bid for the bulk deposit, because the USP of the PNB is the CASA. We are having 42%, and last year we have opened around 84 lakh new saving bank account, and the first quarter itself we have opened more than 55 lakh account. So deliberately we are not quoting for the bulk deposit, because I am having excess 4% SLR also, which I am using through the mode of the MSF, which is I am getting the fund at 6.75.
Okay, so short point, what is your expected deposit growth in the second half, and therefore what is your NIMS guidance?
NIMS guide will be 2.9 to 3, because on account of the repricing of some of the deposit and some of the advances the rent sensitive. But as far as the deposit growth is concerned, we are hopeful that our deposit growth will be in the range of the 10 to 11% in times to come.
Okay. Well, now let me come to the other part, which was very good and which Prashant read out. Your slippage is down to, annualized 0.8%. I don't think any bank that has reported Q2 numbers is as low as that. What is your sense about it going forward? Can you, GNPA is still high. Yours is among the highest at almost 7%. You see that coming down? Any recoveries likely from the various NCLT rounds?
Yeah. I will give two, three things if you permit me give you some time also. The recovery in the first quarter from the NCLT was around 500 crore rupees and the second quarter is also in the range of the 550 crore rupees and third quarter we are hopeful the recovery will be 2,500 and the fourth quarter it will be 1,000 crore rupees from the NCLT only. The reason of the slippage, because it was the least slippage in the last 5 to 6 years, 1,800. This is on account of we have taken a lot of initiative for improvement of the underwriting standard as well as the collection efficiency. I will give one data, Lata, from the 1st of the July 20. Every month we are monitoring the new acquisition. In last 39 months, we have sanctioned 6.68 lakh crore. We have disbursed 5.97 lakh crore. Outstanding is 4.63 crore, where NPA is hardly 1,314, which is coming 0.22%. Even segment-wise, agriculture 0.23, MSME 1.47, retail 0.18, and corporate में hardly 31 crore. It is coming 0.00%. So this is giving the feeler that whatever slippage we have, it will further decline.
Okay. So your credit cost can fall even further.
Yeah, definitely. It was 1.98 in the first quarter, 1.31 in the second quarter. It will further reduce because if you see my PCR, 92%, so my aging requirement has reduced drastically and slippage is half of the recovery.
Yeah, so how much can you give a number in terms of credit cost?
Credit cost, I have given the target of the 1.5. It will be around because 1.98, 1.5 to 1.7 whole of the way because we are also thinking to further improvement in the PCR.
Okay, that's good to hear. Even your recoveries will improve, you're saying, so that's further likely to improve your costs. Can you tell us about advances? I mean, you're slightly lower than a peer bank, say. Your size, 12 lakh crore is what ICICI is, but their advances growth is 18-19%. You think you can do better, and which sectors will you concentrate on for advances?
You are very much right, Lata. Guidance is 12 to 13%, but RAM is the focus area. If you see the total RAM book is the 55%, and the RAM may be particularly retail side, home, and the car is our main, and the gold loan is the main product. Even we are giving the loan to the corporate also. As on date, my 1 lakh crore book is the undisbursed. Out of it, some of the term loan and some of the working capital, which is unavailed also. As far as new acquisition is concerned, there is a lot of demand in the road sector, where we are giving the finance to the HEM project, and there is a demand from the NBFC side also. As on date, my exposure to the NBFC is 1,33,000, and 99% is A and above rated. So there is some demand from the steel sector for the expansion, the cement sector also.
Okay, very quickly, what about your unsecured loans? It is not much. You have among the lowest personal loans, but it is growing at 40%. RBI is warning. Are you worried about any of your unsecured loans? And what is the tenor of your unsecured loans? Some people have expanded it to even 7 years.
No. In our bank, it is hardly 27,000 crore rupees total unsecured retail loan.
I know that.
And 4,000 is the pension, out of which this personal loan, 17,000 crore is the personal loan, out of which 4,000 crore is the digital mode and 13,000 is the non-digital mode. The digital it is based on the rule engine. Their delinquency is only 0.41%. Total delinquency in the personal loan is 1.22. There is no worry. The average tenure of the personal loan is between 3 to 4 years. Even we are getting prepayment also.
Okay. All right, we'll leave it at that. Mr. Goyal, okay, just a word. Will you be raising capital?
Capital, we have already got the approval from the board for the 12,000 crore rupees, 7,000 for the 81, 5,000 for the 82. As on date, no immediate need, but we have raised 3,000 crore 81 in the September quarter, 3,090 crore in the first quarter, Tier 2. So we are well capitalized, but we are just waiting. If rate will be as per our choice, we will not mind to raise further 81 or the Tier 2 in times to come.
All right. All right, so out of time. Thank you very much, Mr. Goel, and many congratulations for a great show. The stock is up in the green. We have to take a break on that note. We'll come back and Manisha will be joining us to give us the commodities update. Welcome back. Well, the focus of commodity markets, I would assume, is crude today. Manisha is waiting by. Manisha, the geopolitical problems are perhaps the center of your conversation now?
It totally is, yes, Lata. You know, the crude prices have been very volatile. And if you look at 2023 as an year, we have seen $70 of a low and 97 of a high. We've been inches away from that $100 mark for a couple of times in this year now, mostly for the last couple of months itself. So the latest price gain comes in after US said that they have conducted a military strike in Syria. Remember, we already are dealing with a couple of war conflicts, one between Russia and Ukraine, the second between Israel and Hamas. There are tensions between China and Taiwan, and now 9 countries also, that is the Arab countries, are condemning the Gaza bombing. So the geopolitical stress is right there, and is the reason that you have seen $90 a barrel continue to hold. We did see 2% of a decline in the overnight market, but in the Asian markets, we are back above 1% and more there. The US GDP coming in at 4.9%, which is better than the expectation of 4.3%, also has been supportive in sense of demand cues going forward from here. Apart from that, the markets also are looking at better data that we've seen earning come in from China. This is the price cues that we've seen in this week. Even after with gains today that we've seen, prices are down 4% in this week. This is after 10% of gains in crude prices in last couple of weeks that we have seen. Also, no crude supplies have been disrupted until now because of the Israel-Gaza conflict, and that is what the markets took away in sense of premium there. There also is ongoing diplomatic efforts to ensure or delay on-ground invasion into Gaza by Israel, and that also has led to some support. Markets have seen the U.S. inventories, those gained up by nearly 1.4 million barrels. That also led to a feeling that there is enough inventory stock in the U.S. markets there. The high treasury yields ahead of the U.S. Fed meeting is yet another thing that has been weighing on many of these commodities. And then it is going to be the U.S. Fed meet in the next week. That would give you further directions coming in. Having said that, it is about the weak oil demand that we've seen from Europe and statements coming in from China, where they say that they are proposing a cap in sense of domestic oil refining to curb carbon emissions, is what tells you that the Chinese imports also could get hampered going forward. But as I said, all eyes now on the U.S. inflation numbers today and the U.S. Fed meeting in the next week, and that would give you further direction unless something happens this weekend.
Oh, yes, the PCE numbers are going to be very important, not just for crude, but for all markets, isn't it? Thanks, Manisha. We have to take a break on that note. And thereafter, we're going to get the stock of the moment, as it were. That's Shriram Finance. So Umesh Revankar, the Executive Vice Chairman, will be joining in and speaking about the second quarter numbers, which have stunned the market. Welcome back. Shriram Finance reported a strong set of Q2 earnings, and I don't have to say anything. Let's just play out the stock for you, up 8.1% at this point in time. So clearly it is stunned with the rise in the net interest margin as well as the increase in the net interest income. Asset quality also has improved. The company has raised their assets under management growth guidance from 18 to 20%. They were earlier speaking about 15%. So for all details, Umesh Revankar, Executive Vice Chairman of Shriram Finance, joins us. Good morning, Mr. Revankar. Well, the market has given you a huge thumbs up. Before I ask you about your guidance, first, what went so right? What accounted for this very good growth in the NII in the quarter gone by?
Yeah, thank you. I think the major contribution is the merger benefit that is playing in. The synergy of having multi-product and ability to cross-sell multi-product is helping us in increasing our net interest margin. The product mix is slowly undergoing a change. The high-yielding products are being able to distribute well across the country. So that is the advantage. Plus, we also have reduced the liquidity buffer, which used to have earlier for 6 months. Over the period has brought down from 6 to 5 months to 4 months to 3 months. So to that extent, it has helped us in our net interest margin expansion.
Which exactly are the high margin products that you could better sell and cross-sell?
The gold loan is the one product which we have taken in the first as a product to cross-sell across the branches. Next is the PL, personal loan, and of course to the MSME. All three, we are able to do it. Plus the passenger vehicle proportion has increased. There is a strong demand for passenger vehicle in the tier 2 and 3 towns, and that has really helped us.
Okay. Even as you were speaking, we have pictures of the Prime Minister entering the India Mobile Congress 2023, a very important event. We will eventually cut to the Prime Minister when he speaks, but important because the launch of 5G was last year, and it's about a record-breaking improvement that we have seen, but we should be getting those pictures shortly. Okay, Mr. Revankar, to come back. Now, one of the things that's even your CV growth has been very impressive at a 12.2%, but passenger vehicles, as you point out, it's a 32% year-on-year growth. Now, do you think that in the coming quarter, in the second half, it can be as good? There is a bit of a fear that the government may not spend so much on capex.
I do believe the capex spend will continue because GST collection is good. As long as GST collection is good, the government will continue to, because completion of project also will be helping the government to talk about its performance. So they would be interested in showcasing the completion of the infra projects. So I don't really think there will be a less spend. However, the additional spend that goes into rural also would help us in the rural demand.
Okay. Oh, yes, of course. That's what is expected. In case capex is reduced, there will be more spending on rural incomes. But what is the basis of your increasing your AUM from 15 to 18 to 20%?
Basically, I feel the 15% guidance was given as business as usual, but now the economy is doing well. The GDP growth of 7.8 in the first quarter and overall expectation of GDP growth of more than 6.5 for the full year is definitely helping us. And we are also seeing private capex coming in, and there are some activities that is in addition to government spend, that is really helping us. So the demand is quite good, especially the consumer demand is quite good. That is helping the logistics movement, overall movement of the vehicles and the SME activity. It looks quite good, and next 2 quarters, it looks quite comfortable for us to grow at 20%.
Okay. What do you expect the cost of funds to be? After all, in the GSEC market, we are seeing yields rising, probably pushed by global events. But you don't expect your cost of funds to rise?
There would be a marginal increase. We expect around 10 basis point increase in incremental cost of fund. On the balance sheet, it may not have a big impact.
You will be able to pass it on, though?
We should
be able to pass it on?
Because, yeah, we are in a niche segment. We'll be able to pass it on. So we will not have pressure on NIMs because of that.
Okay, so the margins are expected to be better than this 8.5 that you have posted?
Yes, we did give a guidance of 8.5, and that should continue to remain at that level, or maybe a little better.
Oh, maybe a little better because you have said 8.5 to 9. That'll be encouraging. Your cost to income also has been guided lower. What is the basis for that?
Cost to income is at 26 now. We are expecting at the same level. I don't really see immediate change in that for this financial year. Maybe as we grow faster in the next financial year, we will have some OPEX advantage, but we don't want to play it now. Maybe next year, as and when we reach there, we'll see it again.
Do you all make an analysis of how much of your business comes because of government capex and how much because of private capex? Is there any analysis you all do on those lines?
We normally don't do, but see, what happens is when government capex is good, it helps in infrastructure and especially for heavy commercial vehicles. Heavy commercial vehicles are dependent on a larger commodity movement like cement, steel, building material. These movements carry, encourage the larger vehicles to ply. And that's where the larger ticket size loan are in demand. So that helps us. And to the extent, I should say, the capex is very important for us. But the consumer demand and the rural demand also is equally important. We are much bigger in the rural than in the urban.
Okay. Oh, of course, that's fair. And now you all are even getting bigger with gold and personal loans. What is your expectation in terms of the personal loans itself? Your high margin business, how much do you expect it to rise?
We are focused on giving to our existing customers. We don't really give personal loan to the market customer. Our existing two-wheeler gold loan or customers, if at all they want some additional loan, and most of them are businessmen or individual or self-employed, and it doesn't go in for consumption. It goes into for their business as a working capital or as a short-term term loan. So it is, since it is within the customer base, it may not go beyond 5% of our portfolio.
All right. Just a final one. I mean, the reason why I asked you is Reserve Bank has been constantly warning about unsecured debt. In your own case, any extra efforts you are taking, any worries about unsecured debt? Because you are going big on personal loan.
See, we are not actually going big on personal loan. We are selling it to our existing customer who has a track record with us. In that sense, it is not unsecured because we know the customer well and it is not sold to unknown customers.
Okay, okay. Fine. That I'm sure that will be music to Reserve Bank's ears as well. Thank you very much, Mr. Nivankar, for spending time with us and best of luck for the current quarter as well. One hopes it's as good as the one that just went by. The market clearly extremely excited by the performance of Shriram Finance itself, and after the interview actually the stock has gone up from 8.1, it's now 8.6% higher. In fact, generally the NBFC sector has done very well, and more importantly the mid caps have really picked up after 2 or 3 days of severe battering, up 1.5%. Good morning for the stock markets, one of the best performing markets in Asia itself. We wrap up on Bazaar on that optimistic note. Stay tuned. Chartbusters will take the action for